Tax optimization strategies for retirees? Wait a second, you're retired. Why do taxes matter now? You needed a good tax planner years ago. What can I do about it now? You can do a lot. Hang on a minute. I didn't lie when I said you needed a good tax planner years ago. You did. Unfortunately, if you're like most Americans, you never had it. Oh, you had a great person to prepare your taxes. I want you to think about tax preparation versus advanced tax planning and why you need it so badly. Tax preparation is like getting in your car and driving it using the rear view mirror. For most Americans, they get all their stuff together and hopefully sometime in February they carry it down to their tax preparer, the person that does the taxes, to get them processed. Some people wait till March, and then there are the ones that go in early April. Oh, danger. But the bottom line is then you sit back and wait for the call to tell you what just happened last year. That's not what I'm talking about. And retirees need this now more than ever. And if you haven't retired yet, the earlier you can start, the better off you are. So here's the deal. A tax planner is looking at what you're going to face in the future, looking and driving the truck using the windshield. So let's talk about this. So here's some smart, actionable things that you can do. If you're do-it-yourselfer, get your pad and pencil ready because you got some stuff you're going to be able to do right now, some homework. So let's talk about this. Number one, the first one I would come to is the provisional income trap. Yeah, it's a trap. So here's the thing. When you think about this idea of Social Security, taxes on Social Security, are they really taxing it? Are they not taxing it? We can get into the big, beautiful bill all we want. I've done other videos on that. But I want you to think about right now is this idea of proper tax planning, which is trying to reduce how much you pay for things like your Medicare premium. Once you get to 65, for almost everyone, you must sign up for Medicare. And how much you're paying for it is determined by your provisional line in your tax return. So making smart tax optimization strategies can reduce the provisional line on your tax return, causing you to take less of your money and spend for Medicare premiums, and that causes you to keep more of your Social Security check. Ooh, that's kind of interesting, isn't it? And if you are paying tax on Social Security because you're a higher income earner, remember, no tax on Social Security, it didn't turn out like that. However, you are getting a $6,000 credit to help you shave off some of the taxes for most earners. But if you're a high income earner in retirement, like many people that we work with at Alloy Wealth, we still have to do smart tax strategies to help reduce that provisional line on their tax return. All right, QCD. What are we talking about? Not the Home Shopping Network again. No, qualified charitable distributions. If you like to tithe at your favorite charity or church like I do, then guess what? Why have people not been talking to you if you're over 70 and a half? I didn't say 73 where you have to do mandatory withdrawals, RMDs, the dreaded RMD. Right? Which is where they mandatory make you take dollars out of your retirement accounts at age 73 for most Americans now. A lot of you have already been doing it from back when you were 70 and a half. But 70 and a half still matters because at age 70 and a half, you can now take money out of those retirement accounts and use them as qualified charitable distributions, and they never hit the 1040. What? Yes, think about this. If you know you're going to tithe, well, now you can tithe up to $100,000 without it ever hitting that line on your tax return, which causes you not to pay a higher premium and raise your income bracket and cause you to pay even more tax on Social Security because you're probably a high income earner now in retirement, and you are still being taxed on your Social Security, and it's definitely going to help you keep your Medicare premiums down to the very least they could be. How about that? That is something you definitely need to be taking part in if you like to tithe or give money to your favorite charity. Now, here comes a big one. For many people, last year was a great year of the markets. If it wasn't, that's a whole nother video, but you might want to be looking for a new advisor to help you because last year was pretty darn good. So guess what? Why did they not pick up the phone and call you and say, hey, Larry, Susan, you had a great year? Yeah, we sure did. Yeah, it's fantastic. So before we get to the end of the year, come down here and let's take the Roth conversion challenge. Let's see how much money we can take out of your 401, 403 IRA and move to a Roth account so you never pay tax on it again. So let's say your $1 million account is up $150,000 last year, you made 15%. Let's see if we can pull that $150,000 out, how much the taxes would be on it, and does it make sense for you to move that to a Roth where now that money is all yours and you can grow it tax-free forever. And later in life when you need it, you can withdraw it tax-free, or even better yet, maybe you still like your kids like I do. Guess what? You could leave it to your children and not have them pay taxes on it. Well, that sounds like a fabulous idea. Why didn't your big box retail firm call you and have you do that? What about a 7702 plan? Again, if we have money we haven't paid tax on, that's you. Why are we not looking at every strategy available to get it out of those taxable accounts and into tax-free accounts like a 7702 plan? Another great idea. Here's the deal. There is a great danger or price to pay in doing nothing. I know the truth. Your big box retail firm that you've been working with, the people you love, and they're good people. I don't mean this in a negative way. But they haven't helped you at all with advanced tax planning. The current firm you work with, most likely they try to sell you something every once in a while. When I say it like that, it sounds so condescending or bad, and that's not how it's intended. I just want you to realize what you're missing. It's this idea of not knowing what you don't know. Well, think about this. You could be leaving hundreds of thousands of dollars, depending upon the size of your accounts, left to chance. For most people, they find it much better to do advanced tax planning done in writing and make good decisions. Like, is it better to pay taxes now at a known rate, or is it better to delay and defer and pay taxes sometime down the road at a completely unknown rate? Do we want to leave a great inheritance to our children and leave a giant string attached so they end up paying who knows how much in taxes at that time? Or do we want to leave them a true gift where they get to give you exactly what you gave them? Would you like to control how much of your dollars go to the government? And I love the United States of America. It doesn't mean I want to give them extra money. Think about that. Do you want to control how much you give the government? Or do you want it to be out of your control based on future tax decisions that you don't even know are coming?